Hey traders, welcome back to another Sunday video. In this video, we're going to be talking about stocks, commodities, currencies, gold, etc., and some of the upcoming news this week that will be very, very important. We have the Fed meeting, which will be very critical. And we're also going to talk about some of the latest economic data, what it could mean. And of course, we'll go through the Commitment of Traders report together. So stick around, also share some of my current setups. Should be an action-packed video for you. So let's jump in. As we get started, do me a quick favor, hit that thumbs up button on the video. It does help quite a bit. It also tells YouTube that you want to see more of my content so you can not miss out in future videos. So first off, let's take a quick look at what happened last week. Towards the end of the week, we saw a sell-off in the indices. The S&P 500 came down, closed flat for the week. NASDAQ was actually down on the week. The Dow was kind of mixed as well. The dollar index had a bit of a recovery, which pushed the euro dollar down, so on and so forth. And gold was really interesting last week. Yes, it had a bit of a sharp sell-off towards the end of the week, but overall, gold is really up in the last several weeks. We'll talk about gold in just a moment. Oil made a sharp move to the upside, and that's actually drawing some attention from markets, which could be very pivotal as we go into this week's Fed meeting. And I wanted to make sure to go through this with you guys just really quick, the economic calendar for the week. This week's a big one, man. We've got the RBA, which is the Bank of Australia, the Bank of Japan. We've got CPI out of Canada. We got CPI out of the UK. And the big meeting of the week, at least for most participants watching this video, is going to be the FOMC statement, economic projections, and the Fed funds rate decision that comes out this Wednesday. That's March 20th. I'll be filming or live streaming that event, so I encourage you, make sure, if you have not already, hit the notification bell on my channel's subscription option, and that way you get notified when we go live. This will be a huge event, and I'm really looking forward to what we get. We also get the press conference. That's going to be massive, right? Because what we hear from Jerome Powell there will be pivotal in what the market is going to do next. Whether you watch gold, currencies, commodities, indices, whatever you trade, this will be a highlight moment of the week. We also hear from the Swiss National Bank. The press conference there will also be important. And of course, out of the UK as well. We also get PMIs towards the end of the week. And Fed Chair Powell, in case he didn't get enough out earlier in the week, will be speaking Friday. Point in case, it's a huge week. Moving right along, let's take a quick look at the US dollar, which is where we'll start in terms of chart analysis. The US dollar has been starting to form a bit of a downward trend. And this week, like I mentioned, is going to be pivotal, not just because of the economic news, but what price decides to do here for the dollar in reference to all of that potentially market volatility that we could see due to the news and statements. So the dollar index, from a trend analysis perspective, was trending very well to the downside. It then started to spring into action. We saw some strong economic data, but that has recently reversed. We've had several economic reports, which we've covered on this channel at length, that have been a little bit cooling or disappointing. Some of the ones to mention are PMI numbers, consumer sentiment on Friday was weak, GDP numbers, jobs numbers. The point is, economic data has shown actually some weakening in the economy. That's pushing the dollar lower. Now, why did it spike up? Well, that was because CPI and PPI were both relatively hot for the dollar here recently. But in my personal view, despite the inflation figure being a little bit hot, the overall picture for the dollar is more to the downside overall. Why? Well, yes, you're getting a tick up in inflation, but economic readings are still soft. And that combination is overall, in my opinion, more downside expected for the dollar. Now, if something changes, let me give you an example. If the Fed this week says, actually, the economy slowing is okay, but we still will keep interest rates higher for longer because inflation is still very problematic. If we get a really strong sounding Jerome Powell this week, yeah, the dollar actually could break out. So I'm really closely going to be watching to see if my analysis on the dollar remains bearish as we come into this resistance, or if I need to change my idea about the dollar and potentially get bullish. So I am very receptive this week and can be swayed either way depending on what we hear from Jerome Powell. But mostly speaking, I lean bearish as we go into this week. Here's a look at gold's technical chart, and I am currently still long. I have two trades open on gold. One is way back here. We are entered around 2031 an ounce. This trade has been a monster for me. And the second one is one that I added here recently. I've trimmed my stop loss, actually tightened it up quite a bit, and pretty close to getting trailed out of both positions. By the way, if this does break, if this support level that I've got marked up does not hold, then I will take a very tiny loss on this trade and a very large win on my first trade. So I've added a second trade to my position, basically seeing if we can see gold continue to push. We're at support. If we don't see support hold, I'll be out of the trade for a total profit of, well, we can just pull it up here. Actually, hold on, I gotta log into my account. Okay, so I just logged into my account. My gold position is up $5,500 approximately, and my silver position is up just under $900. Metals have been really good. They're basically my only two momentum trades that I have currently active, and I'll continue to watch this. Now, I am trading, as you saw here, GLD. I choose to trade ETFs. It's just what I'm comfortable trading, but it is the exact same concept as trading the futures market or the CFD XAU USD. The percentage movements are the same, just a different symbol. So yeah. We also just got the latest round of commitment of traders data. Let's break this down together really quick. So if we take a look at this net positioning, we still see gold and oil up towards the top, but we have a new contender. The Nikkei actually had a big institutional increase. You can see 12.69%. We'll get down to this table in just a second, but overall, these are your biggest positions. Silver, gold, oil, love to see those all up there together. The Dow's interesting, the pound, and the Nikkei. So these are your most bullish assets. Your most bearish ones are going to be Australian dollars, the Japanese yen, Swiss francs, and the bond market, CAD, etc. So now let's take a look at the latest filing. Now this is longer term. I always point this out when I highlight this area, because a lot of traders will just look at this and that's all they care about. But remember, an institutional positioning overall can be very right in the long term, but very wrong in the short term. Just because they're long gold longer term, or this is their overall net positioning, gold could trend lower for some time before it overall moves up, right? And they're not even always right. So institutional money, we track it through the commitment of traders data, but it is by no means a holy grail. Let me get that out of the way. However, it's a very useful tool. It's why we talk about it all the time. So let's take a look at some of our biggest winners and biggest losers of the week. The Japanese stock market, the JP225 or the Nikkei, as I mentioned earlier, platinum, silver, the US dollar, and the bond, the 10-year government bond. These are your kind of biggest buys on a net week-to-week change. You can go through this data at your own pace if you'd like to pause the video, or of course if you have a copy of the Edge Finder. The S&P 500, the Australian dollar, the Swiss franc, the CAD, and the Kiwi were your biggest losers, notably also gold and the NASDAQ NASDAQ actually saw slight buying. Gold saw slight selling as well. Also, if you're somebody who is interested in getting a copy of our software, there is a discount code and a link down below in the description. If you'd like a copy of the Edge Finder, you can get a significant subscriber discount by using code YTVIP. And of course, the Edge Finder has many, many indicators that we've custom built. This is a blood, sweat, and tears project for me and my company, A1 Trading. If you'd like more information, head over to our website, a1trading.com. Before we jump into indices, I do want to just point out kind of where we're at overall in terms of Edge Finder scoring. We are seeing the DAX getting a bullish read, oil's getting a bullish read, and everything else is pretty much getting neutral this week. I do think that this week with the Fed meeting, we could get some momentum, we could get some interesting clues, and perhaps that momentum could lead to some stronger scores on the Edge Finder, but this does happen. And of course, if we expand it beyond just commodities, indices, metals, we still have plenty of signals from the Edge Finder overall. You can take a look at them now. We'll come back to this with a little bit more detail when we talk about some currency setups. And now we've got the S&P 500 pulled up, and you can see it did pull back this week, but overall basically was flat on the week. You can see Monday to Friday just erased those gains. What will be interesting as we go into this week is what we will hear from Jerome Powell and how that will impact the stock market, which has been on a massive tear here recently. I've been vocal that I do think that the S&P, the NASDAQ, etc., could be due for a bit more of a pullback. However, it could just continue to bounce off of support and continue to rally. What I'm personally waiting for is, yes, that pullback, but really more importantly, confirmation from my software, the Edge Finder. Of course, when we get that bullish reading, what that means is it's looking at lots of economic data, the commitment of traders data, etc., and giving us an overall bullish read. When isolating just for the S&P 500 really quick, we'll break this down in just a quick succession. So first of all, the score here, and you might notice something if you're an EdgeFinder user. You can see we just expanded some things. Stay tuned. This is an exciting update that's coming to the EdgeFinder. We are expanding our top setups algorithm, as well as how easy it is to read. I'm really excited about this. This is one of my most favorite projects we've been working on, is basically just making this table a whole lot more comprehensive. Anyways, we're getting neutral readings on the S&P 500. Let's break that down. We get an overall score of -1. That's the sum of all of these. When we take a look at commitment traders data, we mentioned that the S&P wasn't too favorable this week. Now, if we add some of the other indices really quick, so let me just go US 30, we'll get that in here. And then we'll also take a look at the NASDAQ, and that's good for now. Let's take a quick look at this. So scoring wise, the commitment of traders data was more favorable towards the NASDAQ and the Dow, right? So NAS and Dow. And then on the S&P 500, not so favorable. So that's why the score was dragged down on that. Next up, we can take a look at retail positioning. The crowd is very much betting against these two, where there's some neutral sentiment on the NASDAQ. The seasonality of the month of March is overall historically positive in the last 10 years. The trend is slightly more favorable in these two than in the Dow. If you take a look at GDP numbers came out recently, somewhat disappointing, not great for the S&P, the NASDAQ, etc. Manufacturing PMIs, services PMIs, retail sales. I won't go through every single one of these, but you can see it's factoring economic data, generating a bullish or bearish output. So right now, we're getting pretty neutral readings on the indices. And what that means to me is that I'm going to wait for my system to generate setups. That's what I meant when I pulled up that technical chart and mentioned, yes, it's in a technical uptrend, but I need confirmation from my software. So back to the technical chart. Yes, I think we're sitting at support. Yes, I think we're in an overall uptrend, but I'd like to wait for my signal to generate for me to actually be enough confirmation to actually take trades. I've learned over the years that by systematic trading with my stuff, I get more into trouble when I stray away from my strategy, from my system, than when I stick to it. So I'm just going to be patient and try and wait on these things to set up. We can switch over now to the NASDAQ. The NASDAQ pulled back a little bit more aggressively this past week. In fact, if we switch over to a weekly chart, you can see that's the second week in a row that we've actually had downturn in the NASDAQ. Tech stocks perhaps seeing a little bit of profit taking, and we'll go off on a quick tangent here. Here is the SMH. This is the semiconductor ETF, which includes big names like NVIDIA and AMD. These are big chip making companies which have led the market charge higher. So when we go look at the NASDAQ, it's no question that since those companies, which had been leading the charge, have been pulling back, it's going to drag the NASDAQ down with it. I love the NASDAQ long. I love the idea of getting long, but I only love it if my system tells me, and this is a clarity thing for me. If you're an EdgeFinder user, you know. Many of you guys who watch my videos are EdgeFinder users. Also, can I just ask you, if you are an EdgeFinder user, can you do me a quick favor? If you're an EdgeFinder user, type EF user in the comment section. It would make my day. And make yourself known. I know a lot of you guys are on the same trend as me, getting more into fundamental data, getting more into commitment of traders data, retail sentiment. You're using data with your trading. And if that's you, if you're somebody who does that, raise your hand in the comment section. Put an EdgeFinder user in the comments. It'll be really cool for me. And I imagine you'll see a lot of other people and just think it's cool. I mean, the EdgeFinder is a game changer. I know obviously it's something that I sell, but I genuinely get so excited when I speak to other people who are knowledgeable on the tool and the strategy, and they get it. It's one of those moments, if you know, you really are an EdgeFinder user. And again, make yourself known in the comment section. Anyways, the NASDAQ pulling back. Again, very much interested in these pullbacks. I've got these zones. This is a bullish chart for me. There's no question. I just need a confirmation signal from the EdgeFinder. Will I get it this week? Maybe. Will I get it next week? Maybe. Whenever it shows up, that's going to be my cue. Hey, it may be time to start picking up a position. And that's how I'm going to personally play it. I'll, of course, look for a technical setup to go along with it, but same story for the Dow. again, a bullish chart overall, and this one may actually be more of a candidate than the others for possible bullish setups. It currently leads with a score of +3. If it gets up into like a 5+ score, we may be starting to see something there. Commitment of traders data, by the way, was really solid for the Dow, and I don't mind the idea of potentially getting more into value stock names, which are mostly comprised of what's in the Dow, right? It's bigger, stronger, kind of more secure companies, and if the edge finder's queuing towards that, then I might look to find a setup on that front. Now, a moment ago, I talked a little bit about seasonality. Let's take a look at the month-to-month chart on the edge finder for the S&P 500. What this shows you is the last 10 years and the last 5-year historical average performance of the selected asset. Now, in your own time, if you have a copy, you can use whatever you want. If you trade currencies, if you trade commodities, whatever you trade, feel free to take a look at the seasonality. In fact, I very much encourage you to do so. Seasonality is an incredibly underutilized resource that traders ignore, when in reality, it is one of the simplest ways to add confirmation and potentially even an edge to your trading. At the end of the day, that's the point of the edge finders, to help you find more setups that make more sense. Anyways, March, historically in the last 10 years, is actually a positive year for the S&P 500. In the last 5 years, however, it's been a little bit mixed. So this has me cautious. Yes, longer term is more valuable information, the last 10-year historical average, but there is something to be said about in recent years, we've seen a bit of a dip in March. So we'll continue to watch that close. You take a look in the month of April, May, June, you're starting to get some positivity. September's last 10 years has been a really tough year and even worse in the last 5 years. So something to always keep in mind is the flow of the overall S&P 500 historically. It's one of my favorite charts to keep in mind, especially since I trade indices frequently. Now let's move over to commodities for a second. We've got two categories here, or two charts here selected, the oil market and the gold market. Let's have a look at this score and break this down quickly. Feel free, if you don't care about the scoring algorithm, to skip this part, but I would encourage you, if you're looking to learn more about the edge finder, this is probably the most important part of the video. If you're trying to pick up the strategies that we use, and when I say we, I'm talking about the many traders who use the edge finder, but also the creators of the edge finder, myself and Frank from my team. We've worked on this together for a couple years now, and it's come a long way. So check this out. Real quick, we'll actually do both of these at the same time. So we're getting slightly more lean towards oil. Gold is back to neutral. I do have a long position that I showed you on oil. I'll tell you, when I'm in a position and it flips to neutral, all that tells me is, okay, I just trail a stop. But if this were to flip bearish, let me go ahead and say I'd probably go ahead and look to close the position. That's how I personally will use the tool. So I'm in a long, it's neutral, fine, I'll trail a stop. If it goes red, if it goes negative or bearish, I'll probably look to close it. That's my way of approaching it. Anyways, scores are 4 and 1 respectively. The commitment of traders data was slightly good for both of these, and this is mostly because the net positioning for these two, in terms of institutional positioning, is still very bearish overall. Retail positioning is pretty bullish on oil. So that has a kind of a negative connotation. Remember, when retail is all along something, it gives it a bearish reading, and it's mixed on gold. Let me show you those two things really quick. We'll come right back to this page. Now, we'll do more on retail positioning in a second, but let me just show you in context-wise what I'm talking about. Oil is getting a very high bullish rating by retail traders. At the same time, gold, you can see, is smack dab in the middle. Well, where is it? I got to find it. Hold on. I'm blind. Okay, it wasn't on the screen, but this also reminded me something, so I added back metals. This is also really exciting. Little sneak peek, we're adding more assets to the edge finder. So kind of exciting. Silver's already made its way onto the screen, but here's what I was saying about gold. Gold is still mixed, 55-45. So with that mix, why did this get mixed? Well, it was actually retail traders were really bearish on it. They've actually flipped since gold has started to pull back. Retail traders who were lucky enough to kind of short towards the highs, or maybe not lucky, maybe they had a strategy. Let me rephrase that. But most traders were shorting it all the way up and getting smoked all the way up, right? So some people who caught the later sells did okay, but now they've closed out and are actually kind of going back long. So there's a mixed sentiment. So mixed on gold right now. So in terms of retail sentiment, while I mentioned oil is a little bit more polarized and giving us a contrarian sell signal. Okay, so we're back to the top setups breakdown here. Let's keep going. Now we understand retail positioning for oil. Seasonally, we already understand basically we're looking month to month. Both are expected to slightly be more positive than negative. Trend is slightly positive for both of them. But GDP growth in the US, we used US GDP for both of these assets as it's the biggest player in the game. Okay, GDP growth in the US was weaker than expected. That's worse for oil and actually a positive signal for gold. Let me break it down. Oil, negative because slowing GDP means less demand for oil. Not so great. Gold, slowing GDP is fear-driven, and that's actually a positive signal for gold. So you can see how they flipped. And you'll see that being a theme across some of our economic indicators as we break this down. Manufacturing PMIs, SPMIs, right? Services PMIs, retail sales. The ones that are showing a positive are showing, hey, economic growth, that's good for oil, right? Inflation being hot is just straight up good for oil overall. But inflation rising is not necessarily. So here's the thing. Gold's inflation score is confusing to a lot of newer traders. But let me break this down. Gold, let's do this really quick. I'll try and keep it in simple layman's terms how this algorithm works. Inflation high is positive for gold. But inflation still rising while the economy is still hanging in there is not so good for gold because it means the Fed can still rate hike or keep rates at this point more expected to be higher for longer. That's not great because the dollar stays strong and that puts pressure on on gold. So we see a high inflation area, but it's mixed, so we're getting neutral rating. That's how that works. Labor market, of course, we had a tick up in jobs and then interest rates, etc. So that's the overall breakdown for these commodities. Now let's take a look at the technical chart. We did gold earlier and did briefly kind of cover this already, but let me just reiterate. If price does stop me out, one thing I will also mention is that I do think that our next spot is probably a ways away on the daily chart. The daily chart, I don't really see key support unless you're talking briefly about this level here, the previous all-time intraday high, which is right around where my stop loss is. But more importantly, the next major level of daily chart support that I see is not down until you get to about 2075, 2080. So if we do break down, we could continue to slip and slide down for a little bit. So I'll be very careful with gold and trailing a stop pretty tight on this one for now. Here's a look at the oil daily chart, and what we can see is a clean breakout that happened last week. And this is something to note because inflation, remember, oil, if it remains elevated, can actually be a bad thing for inflation, meaning high oil prices can trickle down to everything else. Rising prices means inflation. Inflation means Fed keeps rates higher for longer. So why is oil breaking out? Well, part of the reason is that there's just that continued threat of geopolitical tension, but there's also what we saw from OPEC, which is a basically modern day cartel of countries that produce oil, and they set, they control a large majority of what is on the global markets available for purchase in terms of oil stock. And if they want prices to go up, what they can do is they can actually limit the supply that goes into the marketplace. So OPEC has kind of lit the flames for wanting to keep oil prices elevated. They've mentioned they're not happy with oil prices being low. They would like to make more money. So of course they can release less into the market. And that theme could be a little bit troublesome for indices. It could be troublesome for the inflation story. So we'll have to keep a close eye on that. But for now, we continue to trend higher on oil. So something to keep an eye on. Next up, we'll take a look at currencies here. And I know a lot of my audience loves their currency crosses. So let's have a look at what we've got here on the docket. I've selected major currency pairs, minor currency pairs. We could look at it another time, but for today, we'll stick to the major currency crosses. Right now, we're getting a lot of neutral readings, which is normal. Usually you do get a lot of neutral readings when it comes to the Edge Finder, and it should be that way. It basically isolates from more strongly correlated readings in order to give us a bearish reading. The only one of the list that is really printing a bearish or a strong enough reading here is a bearish reading on the Kiwi dollar. Now, with that being said, I know not everybody trades Kiwi dollar, and people probably are curious with the euro and the pound. I will say from a price action standpoint, these are something we can look into, but the overall score is kind of softly neutral. Now, the euro has potential this week to cross over into a bullish territory from the edge finder, so we'll keep a close eye on that. But let's take a look at the technical charts. All right, I've got the euro dollar pulled up really quick, and what you can see here is that we're in a bit of an upward trend here recently. What kind of concerns me is that this upward trend here, there's something a little bit that I want to point out. Let me try this really quick. So let's switch over here, and I'm going to go to retail positioning. And what kind of concerns me is that this pullback, if we take a look at this, is actually being heavily bought by retail traders. 61% of retail traders are buying the dip on the euro. Now, that's not necessarily meaning that we can't possibly see the euro go higher from there, but it is something worth mentioning that we're actually getting a contrarian sell signal because retail is very much interested, it seems, in buying this pullback. Now, again, that doesn't mean that this pullback can't bounce and we actually could see retail be right about this, but it is something worthwhile. For me, when it comes to the euro, I'll wait for a little bit stronger of a signal from the edge finder before I touch that. And who knows, if the euro dollar crashes this week on the Fed basically coming out more hawkish, then I'll be really glad that the edge finder kept me out of that trade. Here's the pound. We'll take a closer look at this one here. Pound dollar pulling back, and you can see if we draw from low to high, we've got a nice little pullback here to the 50% retracement. And that 50% retracement does happen to line up here with a nice key area of support. This one actually looks pretty good. I mean, it's a clean price action move here. We've seen the pullback, and yes, this has been, pretty carnage intraday charts if you've been watching the pound dollar and you've been long, but I think we might see a bit of a bounce going forward. So we'll watch that one. The dollar yen was able to bounce off of this level of support. And the dollar yen, again, I'm kind of neutral on this just because of the edge finder's scoring. But I do think you could see resumed bullishness for this one this week if you get some hawkishness from the Fed. It's all about the Fed this week. And again, technical charts do not matter one bit. If the Fed changes their tone on a dime, it will change everything for the chart patterns as well. So again, remember, we use on this channel, we're in reality land, fundamentals first, technicals second, right? Here's the reality of the markets, right? All your major money managers, all your institutional traders, all your, I guess not all, but 99%, everybody that I've ever met that is a large money manager or is a professional in this industry, like they manage a lot of money and they know what they're talking about, they don't talk about technical charts all day long. Do they use them? Sure. But the overall picture is macroeconomics, company earnings, things like that, real stuff that really impacts the valuations of currencies, commodities, the stock market, etc. So remember, that is why we lean so heavy on the fundamentals on this channel. And we'll go back really quick to retail positioning. You can see commodities like platinum, silver, US oil, euro dollar. They're getting a little bit more contrarian sell signals. And then you have the indices, the S&P, the Dow, dollar yen, actually, interestingly enough, and the FTSE as well. These are getting more bullish contrarian signals as retail traders seem more heavily short on those things. We can expand to include minor currency pairs, but we'll have to take out some other things. You can see it starts getting messy because there's so many charts at once. So here you go. There's your minor currency crosses for those of you guys who trade things like pound, yen, etc. Kind of interesting just to have it all on one screen. And here is my personal performance this year so far. I'm tracking this on my brokerage. This is a live trading account. I've done a whole video logging into my brokerage. If you'd like to see that, you can find it on my homepage of my channel. But we're up just about $24,500 on the account this year so far. And, not bad. To me, a little disappointing that I missed some of the indices runs, but I do think we very much could see pullback in the indices. And while we saw some of that already recently, my account continues to stay elevated. And I'm okay with that. So even if I, missed out on the run up on the indices, it would be nice to miss out on some of the pullback, meaning I'm not long when they're pulling back. So we'll see if I can play that right. But I mentioned I watched that closely as we go into this week. The Fed week, of course, very, very volatile. I do also want to mention that if you're looking for a broker, there's a couple things down below in the description. So if you are somebody who is looking for a new brokerage, whether you're in the US or outside of the US, I have several brokers. There are referral links in the description down below. You'll be helping me out if you choose to use those links, full transparency, but I'll try and help you out too. And I've done that by basically setting up special perks for anybody who uses those links. I know several people at different brokerages, and I've basically bartered some great sign-up perks for you guys. There's sign-up bonuses, there's free products, there's free stock shares when you use them. Just click the link that works for you down below in the description if you'd like to check out those brokers, and you'll be very happy you did so because there's a bunch of free, great extra perks available for you. With that said, guys, that's going to wrap up the live or this video here for this week. I mentioned this earlier, but we will be live for this FOMC press conference happening on Wednesday. Make sure to tune into that if you have not already. And if you made it to the end of the video, thank you very much for watching my content. I very much appreciate it. I love this stuff, and if you do too, then hey, I would encourage you to subscribe and stick around with me for the long term because we will be here doing this as long as I'm around. I love doing these videos. I don't see ending them anytime soon. So have a great rest of your weekend, guys. Thank you very much for tuning in. Trade safe this week, and we'll see you on the next one.